Welcome to the Tokenomics DAO Podcast, where we explore everything tokenomics related, ranging from deep dives on the tokenomics of the newest protocol to demystifying the nuance of building a successful token ecosystem. Our goal is to bring awareness to the importance of tokenomics and the crucial role it plays in defining the success of a protocol, helping make tokenomics relevant for everyone, builders and investors alike. I'm your host, Flo, joined by my co-hosts, Jason and or Lovis. Welcome to the podcast.
In today's episode of Tokenomics DAO Podcast, we're talking about if a token that is backed can be decentralized. And we're having a wide-ranging discussion about trust and transparency. We're briefly touching on the Terra Luna bank run. We're distilling it down to that investor confidence is really at the heart of any transaction system. And so we're looking at that on many different levels, consumer level, even briefly venturing into articles written by McKinsey, which was more of an accident, to be fair. We're discussing systems that could be used by nation states to settle their trade balances. And we're ending on a couple of beautiful metaphors that involve towers and tigers. So hopefully you enjoy this discussion today and subscribe and listen next time.
In today's episode, I guess we recently had this conversation. I don't know where it came from, right? I think you sent me an article, Jay, on Russia may allow crypto mining and gold-backed stablecoins, and it talked about decentralization in some way. And then I kind of said, well, if it's backed by something physical that exists in the real world, it can't really be decentralized, or it will be difficult. I at least can't really imagine it. I mean, if there's gold in a vault somewhere, then the government can still go and seize it unless you have that vault in, or a representation of that vault in every country. So it's not really this whole truly decentralized. I guess will be hard. So it's probably more of a philosophical conversation today, but I think that'd be interesting to get into, right?
Yeah. So then basically you you summarize the issue or reduce the issue to something. What did you say? The question was, can something be backed and yet be decentralized, right?
And what would it be backed by, right?
And to give the question some relevance for today, it's of interest to us, not only just us, but I guess to nearly every actor in the economy, right? To know, I think everyone likes things to be decentralized, but then with decentralization comes issues with safety or efficiency or things like that, right? So then the question then goes, okay, we'll trust one guy to be the arbiter of what's right and wrong, because that way he's the referee, he's the umpire, he's the third party that everyone trusts, and then everything becomes more efficient and effective, right? Less friction. You don't have to always go and prove something during a transaction because a third party's already done that for you. And then right now the issue we're facing is what happens when that trusted party can't be trusted. Like if everybody's got the money in a bank and everybody has an account at this same bank, what happens if this bank goes bankrupt, right? Or what happens if this bank says, sorry, if you're Russian, we can't deal with you, or if you're Chinese, or if you're Iranian, or if you're
Canadian,
if you drive a truck, right? So then the scale then goes, shit, maybe we're too centralized now. Maybe we need a bit of decentralization to afford us that safety, that off-ramp, that exit, right? And I guess that's some general context as to why this question was interesting for us. and why we're thinking about it. And I'm sure I'm sure it's like super high up on many people's minds at the moment.
Yeah,
especially since I guess this whole Terra Luna thing collapsed, which claimed to be decentralized, and I guess it was quite decentralized, but it just wasn't backed. So even though they tried in buying up like Bitcoin reserves to defend the peg, that was only fractional. And I guess with all fractional banking, if there's no reserve or no central authority that can then insert an unlimited amount of liquidity, you'll have issues, right?
Yeah.
So then like a bank round can just kill the whole system, and that's what it did.
But fundamentally, it's about confidence, right? Same with the Terra Luna thing. What triggers the bank run, I think, in any system, be it Tether or, I'm not saying that anything is going on with DAI, but if they ever experienced something, it would always have something to do with investor confidence disappearing, right? And then they're like, oh no, I'd much rather get back what I put in than hold this thing that you gave me, you know. But yeah, I mean, I guess where should we start? Like, that article from it wasn't even an announcement by Russia, right? It was more like a ongoing discussion. Like, there's a couple of people, I think, in the banking facility or whatever in Russia who are saying, hey, you know, since Russia is rich in resources, Bitcoin mining or crypto mining might actually be a good thing for us, but they just banned it, right? And then the other thing is, you know, we're again huge commodities producer, so why not have a internationally tradable currency that's backed by our commodities, which probably gold would be one of the biggest ones in that basket. But then, of course, when you read it, they also say, "Oh, but the whole thing has to be state controlled, right?" So it's so it would be like a blockchain technology, but it wouldn't represent any of the things, I think, that make this technology cool or new, like a revolution, is that it's trustless, decentralized, without these trusted parties. And if
they could just use a database, right? To
if it's
get this done.
state run chain, and just do it just build it on Amazon Web Services and have it audited. You know, like
maybe
it's
on the Russian version of that,
yeah, of course. But like
I guess I don't know. So I guess then the problem is, like, could it be possible to build something that is decentralized but also backed by something? I mean, you could have a stable coin perhaps completely backed by Bitcoin. But then I guess you have the issues with the underlying volatility that Bitcoin still has. And something like gold doesn't have that volatility, right? It doesn't do 90% moves.
No, of course, it's not nearly as volatile, but in times of crisis, there is also volatility in gold, right? Or, I mean, silver is, I guess, more extreme, but like when the 2020 March crash has happened, there was also significant volatility in gold. But but yes, of course, nowhere near what Bitcoin or Ethereum does, for sure.
Yeah, and when we have this conversation, I think it's also important to keep top of mind that what we're talking about doesn't always have to be absolutes, right? Like, we can say Bitcoin on one end and whatever state-run central bank digital currency on the other, and maybe, you know, what might come to pass will be something that's somewhere in the middle. And the question is, as it goes closer to each extreme, like, what are the characteristics of this thing going to look like, and what are the, you know, consequences of us using something that is this centralized or this decentralized, right? Yeah, and when we say that it's volatile, we also have to be aware that we get a fixed, let's say, relatively fixed salary. We pay a relatively fixed, you know, amount of money every month denominated in our fiat for our rent, our food, etc. Right? And so for us, we're always using that as the yardstick, like subconsciously or
Sure.
consciously, I don't know. But you know, so if you were to argue, you could also argue that, hey, during the 2021 timeframe, the dollar was super volatile. If you compared it to the price of oil, that went from, you know, -40 to over 100, or if you compared it to the S&P, right?
Yeah.
So it's crazy because right now we're like living in a world where actually everything is getting tossed around.
Mm-hmm.
And then we're talking about this thing called stable coins, right? Like stability. What is this thing that we're talking about? Does it exist? You know?
Well, it is the stability mechanism for, you know, crypto to the US dollar. But then I guess you have this stability mechanism. You could almost have that to everything. You could have a stable coin to oil, right? That,
Yeah.
like,
It's always a
it
barrel.
just, yeah, pegs it to a barrel or gold. But then, yeah, I guess, like, but it would always have to be backed, right? So then if you do an oil backed stable coin, you would have to have that oil somewhere.
Mm-hmm.
Yeah, if it's backed by something physical, you have to then always factor in, like, what storage costs, delivery costs, security. Like, you have to defend the thing, right? I mean, that's the kind of the annoyance with the physical assets. Keeping them decentralized in like many locations, but still keeping them safe is not necessarily efficient, right? So then having like the Fort Knox scenario, I guess, is preferred, where you just build like some super vault and just put everything valuable in there and just have your military guarded or something like that. But then it's of course the opposite of decentralized. But one thing that I thought was cool, that Jay had actually told me about many years ago, I think 2018, was this company goldmoney.com, and they it's a place where you can buy and sell gold and silver with, you know, you deposit euros or dollars or whatever, and you can buy gold and silver, and you don't necessarily take physical delivery of it, you just keep it in their vaults. And they have partnerships all over the world, and I don't know how many, but more than 50 countries. And you could theoretically have your balance transferred between these vaults, no problem. So if I was in Singapore and I wanted to take physical delivery, I could, for a small fee, have my holding transferred there. And then I've never tried this, but allegedly you could then go and have it, you know, pick it up in Singapore. So that's pretty cool. And so that's where my mind went when I thought, like, if you had a token backed by gold, you would probably have to partner with a system like that, where you at least have some sort of decentralized ownership system behind it for physical assets.
Yeah, like it would be on that spectrum that you mentioned, right? It would be a lot more towards decentralized,
yeah,
than a dollar-backed stablecoin that has that in one bank account in the United States.
For sure.
If it had that gold in multiple countries, right?
Yeah. Yeah, and then because if you can't take possession of, I mean, that's a huge problem, right? How can you make it that people can take possession of something physical? That's a massive problem to solve in that debate, centralized versus decentralization. But let's assume you can solve it. Then the benefit is, if once I have possession of the physical good, then I have many options on how to, you know, sell it, use it, whatever. Like in case of gold, theoretically I could turn it into a ring or some piece of jewelry, or I could sell it to many people for something else that I value, a gallon of gas, or I don't know, a loaf of bread, something like, or money, or like currency, another currency for whatever. But yeah, it's tricky.
So how does that gold money Have you tried it, Jason?
Yeah. I have an account with them as well. So it's like how Lovis described it, right? You put fiat in, and then you choose to store money in their system, whether that be denominated in platinum, gold, silver, right? And you get to choose which location your metals are vaulted at. And at any point in time, if you did want to, for a fee, like Lovis said, you can take possession of that metal in certain standardized forms, right?
Mm-hmm.
Like a 999 coin or 10-gram bar or whatever, 4 nines, I mean.
But it doesn't trade
Um,
on secondary markets, right? So it's not really, it's just a tool. It's not a currency in that sense that you could, it's like
But
you don't get like a fungible token that the two of us could exchange, and I could go and take the coin that you gave me, and then
no, it's more like they give you a debit card and you can actually spend your gold and silver in fiat, right?
Yeah.
And they would just then reduce your holdings.
Yeah.
And the cool thing is, like, say I've got a kilo of gold saved, that's like $60,000. I could fly to London and buy a coffee, swipe my card, and they would reduce it with the British pound gold pair, and then reduce the grams that way. And then if I fly then to New York and then buy a coffee there again, they would do the same thing with the US dollar pair. So it just gives you this, liquidity in a very neutral way, I guess. Yeah. And at any point in time, you can take possession. Yeah.
But you have to trust that company, right? That's of course the thing, right? You have to trust these guys at Gold Money and that.
Yeah.
So they try to increase the level of trust by every, I think was it every quarter, every 6 months they get these trusted accounting companies to come in and do an audit to look at the number of bars there, serial numbers, do random assay tests, stuff like that. So the thing is, it's again that scale thing, because like what Lovis said about Fort Knox, there are like thousands and thousands of these conspiracy theorists online saying that is the gold even there, right? Like they haven't done an audit since 1954 or something like that, So it's like it's pretty cool, right? If you put like a few like armored battalions guarding this thing, but nobody knows what's inside. It's like inviting your girlfriend to your house, right? And you can't actually see the house, but there are like tons of like massive Dobermans just guarding this fence. So you're trying to impress the girl, and the girl goes, "Whoa, this guy is probably living in this place that's super duper valuable," and actually it's just like a tent in the back.
Never go in. Yeah.
Yeah.
I mean, it was a fantastic James Bond movie. Probably Goldfinger.
Was it Goldfinger? Yeah.
The plot was that they were they were leveraged long, basically gold in the markets, and then they were planning on detonating a small nuclear warhead near Fort Knox, just so it all gets radiated, nobody can touch it anymore. So it's actually super smart, right? Because you didn't have to actually overwhelm the people, right? You didn't have to even physically destroy the gold. As long as it just if there's like lethal doses of radiation, then nobody will be able to go get it. So you're reducing the
supply. You're reducing supply. Yeah. It's like somebody saying, "Hey, I'll find this way to reduce Bitcoin by 90%."
Yeah. Well, which of course, I mean, so this is a plot from from a James Bond movie from like a long time ago, from the 70s, I think, or 60s. But it shows one problem with, it's not a problem per se, but like it shows a vulnerability of this like backing a digital currency with a physical asset, right? There's always going to be vulnerabilities. You just have to, I guess, you have to see how you can manage them.
Yeah. So right now, the issue at hand is there are a lot of big economies, right? Significant economies in the world. Let's say we don't talk about it from an individual's perspective first, right? Let's just say you're talking about it from macro level. There are a lot of large economies that produce a lot of goods and services that the world needs that currently do not trust the current financial system for whatever reason, right? They feel like the system can be weaponized and it has been weaponized. So therefore, they need an alternative solution. So even though they might not say, hey, we're going to stop using the Federal Reserve banking system, we're going to stop using SWIFT, they might like to have something, another layer there as a backup, just in case at some point something, and there was this guy, I love following Luke Groman, right? Because he gives this quite like realpolitik sort of viewpoint on things. And he said, hey, if you go back to the end of World War II till now, nearly every single country on earth has once been considered a bad actor by the United States, right? Whether it's France, England, Singapore, whatever, Japan, right? All these countries are now like strong allies of the West, but at some point in the last 80 years, they were considered to be enemies, right? Or bad actors. So if that were to happen today, everybody's thinking like, man, can I say no to whatever the US wants me to do? Because if I do, I might get like swifted, right? So it's kind of in everyone's interest now to go and say, oh, we need another system. And then, so I think that's why we start to think about it, because what would this system look like? It has to be something that can be used by any country or individual, but at the same time, it needs to be safe. So if you're a conglomerate that now has a ton of money, cash to be saved, what do you do? Where do you put it in, right?
Yeah. But so this is fundamentally though, isn't that is kind of the thing that Bitcoin tries to solve? Or I mean, well, not just Bitcoin, but this like smart contract system, for example, right? So you could conceivably say, okay, countries, new transaction system, you don't have to build straight on Bitcoin or whatever. Like that would, of course, like they could buy Bitcoin as a reserve asset. They could buy all kinds of other digital assets to do that. But then fundamentally, the problem that we need to solve is they need to stake. They need everybody that wants to participate in the system has to have a stake in it, right? Because you need to be able to punish people who try to cheat in a way. So let's assume we want to do that without the need for a massive ass military that goes and polices the whole world. Then I think, being able to take someone's money for doing something bad, that's probably a pretty good stick, right? Pretty good punishment.
But who decides?
Yeah, so some predetermined rules, right, enforced by a smart contract would have to decide, and so or there's like a governance vote kind of a thing, right?
But the problem is always like the physical goods, right? Like, yeah. So how would you that? Let's say the stake would be gold. So to participate in this new system, you would have to stake gold. That could, that could be slashed, to use the terms of Ethereum, right? So they take that away from you if you, act maliciously or whatever. But like, then who takes that away, and how do they take it away, right? Because if it's a vault in Russia, then like the Russian aren't going to let anybody in then saying like, okay, here, take the gold, right?
Yeah, good point.
We're going to give it to you. So, like, how would they do that?
Well, we need like a Switzerland that remains neutral, and
but then what if the neutral is not neutral anymore, right? That's
of course, exactly. I mean, so then
because Switzerland didn't stay neutral during this whole whole conflict, right?
I know for sure they didn't. And it would almost have to be like, okay, so we give it to a small, it doesn't have to be a small country, but we give it to a country that remains neutral, and like everybody pays them security fees. So that means they would have to be, they could like create the most monstrous military defense for themselves to kind of ensure their neutrality. And then if somebody acts badly, like the rules, like it wouldn't even have to be them doing the slashing. They would just make sure that the smart contract is able to execute without interference in a way. That makes sense.
But like, if it's no physical good, really, then if it's a physical good, then smart contracts are like,
yeah,
you don't
right.
need them.
We might
there's
be talking
absolutely
about
no use.
we might be talking about two different things. So like the smart contracts would be what you use to account, right? But then the actual money itself, right? That thing. So the question is, should money itself be able to be weaponized, right? Because somebody would say, for example, gold, you can't weaponize it, but you could block it, right? Like, but gold itself is neutral. You might be able to stop people from transporting it. You might be able to go steal it. You might be able to fake it, right? Put tungsten in there, but this gold itself can't be weaponized, right? Whereas like the US dollar can be weaponized. So I think that there's that question: should money be neutral? And the classic idealists, and I think I would stand in that camp, would say, yeah, money should be neutral, but we should find a way to account and police the transfer of this money, right? So that it you know, bad actions, it can be used to fund bad actions. And then the question then comes down to, okay, then who decides what's bad, right? And I think that's where things get more tricky. Yeah.
And yeah, I guess like I don't know. The staking system doesn't exist in that way, but there is the current system that we'd have, I say, is like there is an international court of law. And that can be used to punish countries and has been used, right? I mean, it's still up to them to accept that. And then there's the whole sanctions thing that countries have been using to punish others for behavior. So in a way, the system already exists in a decentralized way, right? And so this whole sanctions game that they're playing with Russia now isn't that kind of in a way like punishing them for behavior that the others don't want?
Well, that's the point, right? Like the argument is that it's not truly decentralized because there's only a few parties deciding on who gets sanctioned and who doesn't.
Yeah.
And there's no real means for the disagreeing parties to say no, right? And
well, they're not sanctioning, right? So
they're not sanctioning, but they have to use the SWIFT system, you know? So they still get told. So like India gets told, hey, if you want to buy oil, I know you did not decide to sanction Russia, right? India didn't decide to sanction Russia, but America tells them, but if you still buy oil from them, we might now decide to sanction you because we decide that if you buy oil from Russia, you're supporting their bad actions, you know? So in a way, only a few parties hold the keys to say who gets sanctioned and who doesn't. And I think that's where the issue lies.
But that's a technicality of the SWIFT system. I mean, if now, and I think they've been working on that, if they now had like a separate system with which they could directly trade in rupees and rubles, they could do that.
Yeah, and exactly, and that's my point, right? Like I'm thinking, why not just let everyone trade with each other? And if you're not happy with a certain party, you stop trading with them.
Yeah, right.
Right, and then that's it. If America wants to punish a certain country, then America can decide to stop trading with that country, stop importing, exporting goods, right? But right now, the issue is not that America's doing that for themselves. America's saying, hey, they're dictating who else should be doing that. And I think that's where it's actually very centralized. There would be no big conversation, right? If basically, I don't know, like, you know, Hungary comes in and says to the EU, I don't agree with this sanction. I think this because it doesn't serve our purpose, our security, etc., etc. So you see, the EU is trying to act in a centralized way that all members stand behind a certain decision, right? And then it's basically very centralized. Why not just say, hey, Hungary, if you want to keep buying oil, you go ahead. Poland, if you don't want to, you don't, right? But they're not allowed to do that.
Well, of course, the effect will be a lot weaker.
Yeah, exactly. So then it comes
Right.
back to
Yeah.
that question: should money be able to be weaponized, right? Because you could say, hey, you don't police the person that's trying to buy drugs. You catch him after he has bought the drugs, right? But what we're saying now is that, hey, that person looks suspicious. We're going to freeze him from using a banking system.
Yeah. Well, I mean, so with physical assets, it's super tricky, right? With digital assets, it becomes a lot easier to back something and still maintain the level of decentralization, I would say. Because I mean, in a way, if you have this proof of stake system, you are using digital collateral, right, to kind of make sure that a bunch of people work in a coordinated way without breaking the rules.
So this would be like a Swift, like Swift 2.0 would be, all right, if you want to participate in Swift, then you have to stake this percentage of your GDP in Bitcoin in a smart contract, and the smart contract can then, with the majority vote of the whole world of like all network participants in this network, could be slashed, and so then a certain amount of that would be taken away for bad behavior.
Yeah, but and then of course the rules would have to be defined, because what makes bad behavior, right? I mean, in a typical staking network, I think the bad behavior is just if you're trying to, I mean, not just, but it's if you're trying to forge transactions, right? You're trying to,
if you're not online, like there's also this uptime thing in Ethereum.
Yeah, but it's not for, oh, you bought cigarettes and we don't want you to have cigarettes. You know, like it's not that level of policing. And it's, and like my fear is that as soon as, honestly, any government operates a system like this, they will just not be able to help themselves to police the nature of transactions. Right? That's why I'm like, I mean, but here we're now talking about the centralized central bank digital currencies, right? That is a different scenario where a central bank would issue a digital currency to the citizens in their economic zone, and then essentially banks, as we know them, regular banks, consumer banks, would become irrelevant, because every citizen or every business would just have an account directly with the central bank, and you know, your employer pays your salary or whatever your business income that you have, you gets deposited in your account, and then, but then the difference to today is that every value unit, every unit of digital fiat in your account has like essentially a serial number, so it can be digitally tracked. Where did it come from? Where did it go? Who owned it before you? Who are you trying to give it to? And what are you buying? Right. And so that's a level of transparency that is completely unprecedented. You know, no central entity has really ever had that level of visibility into anybody's like spending behavior. So that's why, to me, that's a major red flag, right? I don't really want anybody to know that.
I totally agree on that, but I think that's like a completely new topic, right? That's like
that
would be like for a government implementing a better version of fiat.
Yes. Well,
right. So
better,
for them, like a more transparent way of fiat.
So yes, for sure. And I'm sorry that I drifted into the new topic. It's just
I think it was good to mention it.
It somehow is similar to this whole, it somehow belongs to this centralization versus decentralization debate, but not, I mean, it's in nuances, right? But yeah, so I mean, original question was, can something that's backed be decentralized, right?
Yeah, so I think like on a state level, like if you are a citizen of a country, and of course then the country or the government has the weapons, so they can decide what the money is. But globally, that doesn't work anymore, right? unless you have a world police that has control over the whole world and can do that, but that is non-existent. So that system that has to exist for the whole world in some way needs to be backed by something. Otherwise you can't really punish other countries for their behaviors, and you can't establish this trustlessness because many countries won't trust each other.
Yeah.
So then I guess like if we kind of think through that scenario, it will become clear or what the real problem is, like how you can actually back something. And we discussed that physical backing is really, really hard, because where would you put it? Who would you trust to decide? And all that. But even with a digital version of that, with like this Bitcoin backed Swift system that I described, but even that, could work, but be difficult too, because I mean, people would need to trust Bitcoin, right? Or a system like that. And it's not 5,000 years old. It doesn't have the same history that gold has in terms of trust, right? Otherwise, the two are quite similar.
Yeah, and also, sorry. What actually is the issue with gold? Let's say we just went back to I wouldn't say gold standard, right? Because gold standard implies that you need your currency to be always worth a certain amount of gold, which I don't think any of us are talking about now. Like even with Bitcoin, like nobody's saying that Bitcoin always has to be 50,000 or 60,000 or 100,000, right? The thing about Bitcoin that everybody kind of like catches everybody's attention is that volatility, that big movement in price. And people look at it as this barometer of trust on the normal fiat conventional system, right? So as Bitcoin goes up in price, people start thinking, oh my God, Bitcoin's going to eat the world, right? So nobody's saying, hey, let's keep Bitcoin at a certain price level. But every time gold's been used as money and used on an international level, right, nearly every instance it's been backed. And that's why it's always failed, you know? Like currencies have always used gold as a backing, and they make a promise to the people saying, hey, 1 ounce of gold is $42, it's 35 lira, it's 12 pounds, right? And then when they can't keep that peg anymore, then there's a run on the bank and then problems occur. But what happens if gold was always this floating thing, floating neutral reserve asset, where, you know, at the end of the year, Germany goes to France and says, hey, I bought a ton of electricity from you. You bought 5 million Mercedes-Benzes from me. So actually there's this differential. I'd like to settle that in gold. We can settle that at this price, right? And then 3 years later, the same thing happens, but the gold price has gone up 3x or 10x. Then they'll go, okay, I don't want to settle in gold, but this time you only need to give me 10% of what you gave me 3 years ago. And in that case, it would be somewhat of a decentralized system, because everybody would be holding their gold if they choose to. And it would be these multiple, different relationships between different nodes where they just transact at the end of the year or every quarter, and they settle their differences in this neutral asset that nobody can weaponize, right? And then maybe one day, when Bitcoin becomes more trusted and has been around a bit longer, maybe Bitcoin would then be used, because instead of sending your armored trucks across to the border to collect that gold that could be, could get ambushed on the way, you could just get on a keyboard and go click, 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 and then you get your Bitcoin, and then states can solve their or settle their differences that way, right? But at the end of the day, everybody's looking for something that would hold value going into the future that everyone accepts, right? So
yeah,
backing or not, it's more, I think the aspect that is even more important than the backing is the neutrality of it. The neutrality and the timelessness aspect, right? Has to be neutral and has to be durable in value going forward. It could go up, it could go down, but it has to always be worth something. It can't do a Luna, right?
Yeah. I guess like the worth something, of course, comes from perception of the different parties trading it, right? So, and with gold, that's almost like a standard, right? Everybody perceives it as valuable, more or less.
Yeah, and I would say with the current system where people are supposed to settle in bonds, right? In US government bonds, Japanese bonds, European bonds, it could have worked, right? Because in a way it's backed by the productivity of the people, right? And as long as these economies produce stuff and they have populations that can have energy to produce things going in the future, it is a durable call on value. The problem was that it wasn't neutral, it wasn't trustless. So government started to issue more and more of these things. And the problem became the surplus countries go, hey, hang on a minute, I don't think it's a durable call on value anymore because there are now more bonds than productivity. And so it's not worthwhile for me to be saving in these things because when the time comes and I need to cash in, there'll be nothing left to cash in on.
Yeah.
And I think that's where the issue lied, right? In this case.
But I mean, add to it the inflation of the nominal currency that's denominated in, right? So then if you increase your currency supply to produce 8% annual inflation, then that compounds the problem, no?
Yeah, definitely. Yeah. So there's the currency that you're going to get paid back in is going down, and the amount of treasuries that are being issued is going up. Right. The population of the United States didn't go up 40% in the last 2 years. The productivity didn't go up 40%, but the bond issuance did, right?
But then like, let's say you wouldn't have that reserve currency status, then countries could just go like, okay, they don't seem to be very trustworthy because they're printing more money, or they're not producing enough as they claim to be doing. So I just won't hold any more of these bonds. I'll go into other stuff.
Yep.
But because of the reserve currency system, everybody's doing that. So if it was more decentralized, I guess that wouldn't even be the problem, right? Because then you would spot, somebody would see like, okay, their debt to GDP ratio is really high. That's not a good bond to hold. Perhaps, right? I'll get more into something else. I'll diversify into a different currency.
Yep.
Or into different bonds. And then that way, like the demand for US government debt would reduce, and for another country's debt, it would increase. And that signal would go to the US and hopefully then trigger a change, right?
Yeah, and that's
it never happened.
It never happened, but I feel like it's happening now. Right? Because if you look at the bonds of all the G7 countries, they're all cratering. So people are dumping them, right?
Yeah.
If you look at and then some countries go, hey, I don't want my bonds to be dumped. Like I don't want the interest rates to go up. So I'm going to print money to keep buying these bonds to keep the interest rates low, right? So instead of Germany buying Japanese government bonds, now it's the Bank of Japan buying Japanese government bonds, right? So it's this very corrupt, maybe corrupt's too strong a word, but it's like it's what does that system even mean, right? Like you've got one institution in the state printing money to lend it to another. Yeah, exactly. Yeah. Right. And we've all read that story before, right? Like it's happened in Weimar, it happens everywhere in history. So in Japan's case, they didn't. So I don't know if you guys know, but most of the bigger nations, their debts, the interest rates have been going up recently, right? But Japan's one has stayed at 0.25%, and the Japanese bank, the Bank of Japan, has been defending that peg of that interest rate very, very aggressively. So like what Flo said, so people go, hey, it's a free market. I see what you're doing. You're printing so much Japanese yen to keep your interest rates low. So what's happened? The Japanese yen has like freaking gone very, very poorly, right, this year. I think it's gone for now it's worth something like 135 yen to $1. And just start of 2021, it was 100, right? So you've got this massive move in these really, really big economies, right? And the exchange rates just move such a great extent. And you can't make long-term business decisions when the underlying currency moves that way.
Yeah. So
and-
like you go.
Sorry, I just want to say the funny thing that nobody's really talking about is that countries like China, their government bonds haven't been doing too badly, right? And that's very surprising for a country that isn't energy sufficient. They also need to import energy, right? But even with the increase in the energy prices, their bond yields just keep going down, And so, for
Maybe because
example, 2017, 2018, they were at like 4%, and now they're 2.8%.
Yeah.
But that's because they're producing stuff.
That could be because they're producing stuff. It could be because there's a bid for their bonds. So people that are looking to store money in something that's durable go and think, hey, there's a higher likelihood that I will get my money back if I buy Chinese government bonds rather than buying Italian, Australian, British, German, Swiss.
Yeah, because that's what we said in the beginning,
bonds.
right? It's backed by what the economy is producing, right? So, and if the economy is producing a lot, then you can say, well, yeah.
It's relative. It's backed by what the country is producing, and multiplied by that, that supply issue. How many bonds are being produced, right?
Yeah.
How many bonds are being created?
Well, and then fundamentally, I mean, the Chinese system being what it is, I'm no expert, but I'm also not necessarily a fan, but neither am I of really any government. But
what
Chinese system does have a just by the way it's set up, and I don't want to even label it anything, it does tend to favor more long-term stability decision making, right? It's like the way they go about it, they always make these like 5-year plans, and from what I've heard, typically execute pretty well on them. So, like if China decides, hey, we're going to go 100% renewable energy, not saying that they are doing that, but if they would, I would have more trust that they will actually execute on that in the time frame given than I would in the US, because while I'm a huge fan of the free market system, it is much more unpredictable what the outcomes are going to be, right? So if I have to park my money somewhere and the number one guy on the block right now seems to have some credit issues, and maybe going to go to number two, and then if it at least at the moment looks like there's stability features built in, then for now that's probably good enough, right? Although I think long term that might also change, right? I think Chinese bonds might also not do so well when we look at them again in 10 or 20 years, but right now in this intense phase of transition, they might be a good bet.
Yeah, in relative terms.
Relatively, yeah.
Because I think also the form of government, they're not needing to get elected, or with a very short 2-year, 4-year cycle, they don't have to market as much. They're able to allow their populations to see the results of use the results of their work to ask the population to say, can you please continue to trust us and don't revolt, right? Whereas with the democratic system, it's more like, hey, I'm going to do a better job than the other guy, so vote me, and I promise I'll do a better job because I promise to give you A, B, C, D, E, F, G, right? It's more like I think the democratic system is a lot more future, like asking the population to look at the future, whereas the non-democratic systems are a lot more like, hey, look how long we've kept you stable for, look how long we've kept you fed and warm and your lives improving for, so keep trusting us, right? And it's actually dangerous for, I think, these communists or authoritarian regimes to make promises that they can't keep, because then the people lose trust in them. Whereas in a democratic system, it's like, hey, who cares if they lose trust in me? I just need to get elected right now. And yeah, I might be running for party A, but it's okay, because even if I screw up, in 10 years' time, party A will have a different leader. So it's like the blame will be pinned on that person rather than on the party. Because come on, if you look at Australia or any, you look at America, it's the same parties, right? It's always, no matter what has happened, it's the same parties.
Yeah.
Right. And nobody, rarely, if ever, do these leaders go to jail or get if they make a mistake, right? There's no accountability in certain ways. Whereas in non-democratic authoritarian regimes, right, the moment they lose trust, it means systematic change, and a lot of accountability happens very quickly, right?
Yeah, interesting. I mean, but so fundamentally, for just trying to reel it back a little bit to the centralization versus decentralization debate. Oh yeah, so I Googled that earlier, right, in preparation for the episode, and I came across an interesting paper from McKinsey, consulting company. Where did I put it? It was like a very simple 3-question metric on how to make decisions within your company if you should decentralize or centralize something.
Interesting.
And, yeah, and it let me. Oh man, I hope I can find it. I had it open here. Where is it? Here it is. The 3 questions are, and this is definitely interesting for our whole like DAO building exercise that we're doing right now in Tokenomics DAO. So a decision to centralize. Let me share my screen really quick so you guys can see what I'm seeing.
Yeah, I've opened it.
A decision to centralize requires a yes to at least one of these 3 questions. So this is based allegedly on McKinsey holding interviews with 50 big companies and key decision makers. And this is kind of mixed in with their experience being consultants and stuff like that. So is there a mandate, right? Do external stakeholders or laws require centralization, right? So that could be, for example, if there's a regulatory thing for compliance reasons. The example they give is, what do you call it? Like at the end of the year, you do your tax accounting, for example. Like this is the statement that needs to be signed by the CEO. Like you cannot delegate that to some other manager in the company. So this would be an example of a mandated centralization. Does it add significant value? So if bringing 2 or more things together into one place, so like centralizing something, will that affect your bottom line potentially by 10% or more positively? And if yes, then McKinsey thinks you should centralize that because money. And then what are the risks? Does it avoid risks of bureaucracy, business rigidity, reduce motivation, or distraction? So many times when we centralize things, people are disappointed because you take power away from them, right? So in a decentralized system, there's more people wearing hats of responsibility for decision making. In the centralized system, there's fewer of them, but they have more power. So in the context of a business, there was an example given with like a company having 2 different product management units, and if they should put them together to make better integrated products. So rather than doing 2 things, like one product has feature A and one product has feature B, maybe we could build products that have feature A and B, But then, of course, you have fewer product managers, they might get disgruntled, blah, blah, blah. So anyway, I thought this was interesting. This is definitely a tangent off of this, but I think it's an interesting thing to consider when having a debate of centralization versus decentralization. Although clearly what we're having today is that plus, can it be backed by physical assets and or
It could also be like by digital assets, but then you get the same problem, right? Of yeah. How do you manage that?
Yeah. Well, you do always get the same problem with digital asset backing, but it's a little easier in the sense that the system is self-contained in one medium. So if it's all digital, then you can have digital ways of enforcing the rules. If it's digital and physical, then you need physical ways to enforce the rules, right? And that's where we're then talking about police or military or at least fences and vaults and stuff like that.
Yeah.
So that is that's like the added complexity. I think it's a fascinating debate. I don't know. I just wanted to show this as an additional kind of brain teaser.
Yeah, we'll link it.
Yeah,
for sure.
We'll link it in the notes, and then, as coincidence has it, one of our contributors is working on the proof of work article, and just submitted. I've read half of it so far, but it's on MakerDAO. So it's MakerDAO is the issuer of DAI, which is a stablecoin that wants to be decentralized and is heavily collateralized. So that means it's typically they go for 200% collateralization. That means if you want to issue 10,000 DAI, you need to put up $20,000 in Bitcoin or Ethereum or some other digital asset. So it's kind of like the diametrically opposite thing of what Terra and Luna was trying to be. So it's like strongly over collateralized. And of course, and the MakerDAO as the issuer of this has control mechanisms to keep DAI pegged to the US dollar. And one interesting thing, and it's tough for me to bring it up because I'm not sure that I fully understand it yet, but I think that they're doing something to stabilize the peg, which is more akin to yield curve control than trying to say, oh, we manage the peg via the redemptions, right? Because that's what Luna was trying to do, is saying, oh, one UST is always worth $1 US equivalent in Luna, which then, of course, as we now know, turned into a vulnerability, death spiral, and so forth. And I think MakerDAO does not try to influence it that way directly, but rather they make it more or less expensive to make loans in DAI. So they're trying to manage the interest cost of taking these loans, or on the other side, the incentive of.
I mean, but that would also influence demand, right?
Yes, exactly. But so they're trying to steer demand that way rather than which is, it's a little bit more indirect, but I think it's right now my thinking is it's clever because it is less direct, so it's less aggressive, but it also makes it maybe more stable. I don't know. Yeah.
And I think it's great. I mean, it's from a decentralization perspective, it's certainly better than what USDC has to offer, right? Because the US dollar backed stablecoin USDC by Circle essentially is a one-to-one dollar backed. I don't know the exact details, but they have hopefully $1 in the bank for every token that they issue, right? And that's how the system works. So you could go and redeem your USDC for that. So yeah, somebody could just go and shut down that bank, and then perhaps that thing wouldn't work anymore. That's not really very decentralized. But then the problem with DAI is, I think the collateral that you can post is also in the crypto space, right? So it's essentially you've got this you've got this stable coin on the Ethereum network, and you back it with Ethereum. So it's kind of not really an asset that performs differently than like in a crypto bear market where everything goes down. It will be a lot harder to defend or to keep that collateral ratio up, right? So lots of people will have to get margin calls and have to add more to their collateral to keep it to keep it at this 200% level. And so I think in the beginning they had these issues, and now what they've done, I don't know, I wrote an article about it last year or so. And then it was backed, I think, by at least like 50 or 60% by USDC. All right. So one DAI is then, well, it's got a lot of USDC in it. So a lot of centralized currency. They add some Ethereum and something else on top, but a lot of it is really a pretty decentralized stablecoin. Yeah, so I think that's I
mean, the other question that I have with it is, so if there's one smart contract, I guess, executing this, right? Like where I can deposit my collateral and I can get DAI out, we consider that decentralized because it's a completely rules-based system, right? It's a smart contract. There's no credit checks, there's no KYC. So I get that and I like that. But fundamentally, it still is a single point of failure, no? Because like, if something were to go wrong with that, like wherever I lock my digital assets, it still is in one place, digitally speaking.
Well, I guess, yeah, if you could trick that smart contract to somehow give you the locked collateral or use it in a way, then yeah, I mean, that's a big honeypot you could get to, but at least it has that transparency, right? And that's what it makes it interesting, because you can go to Etherscan, you can look at the smart contract, you can have a look at it yourself, if you can understand code. And even if you can't yourself, there'll be plenty of people who know how to and who've done that and who've looked at it. And I think that's the beauty of it, right? So, and that's also the problem, I guess, with entities like Tether, which is another US dollar backed stablecoin, who haven't been very transparent about their holdings, right? So they don't hold physical US dollars or like US dollars in a bank account one-to-one, but they also have other similar financial instruments that they hold that are not as liquid or whatever. And it's all good, right? If they were transparent about it, and if people could see, or if I buy one Tether, then I know that this isn't really 100% one US dollar, but it's also, it's maybe only 40% USRs. It's like other dollar denominated assets that they hold that might be more risky than the US dollar might also be volatile. All those things, right? And if that's all transparent, I think that's pretty good. Then people can know what they get into. They know that it might be risky, but they know. If they're not transparent, then I guess that's always an issue.
Yeah, so I guess the trust, right? It comes back to trust, and it comes back to confidence of the players, let's say. So fundamentally, for a system to work, we need to trust it, and for it to be trustable, we would need to ideally have transparency, right? And so I think that's the main issue we're running into right now with the legacy financial system, let's say. Key players have become less and less trustworthy, and there hasn't been transparency really. I mean, not really ever. So it seems like that's just it's tilting the confidence of many important players, and hence looking for alternatives, right? But then, so just from this like short news article that triggered this discussion today, what Russia was just thinking about doesn't seem like a good alternative to me, in the sense that if it's a state-run chain, then like we said before, just put in a database, because nobody's going to trust that anyway. In the first, like, not any one entity, right? Like if it's 192 countries and everybody has an equal vote, maybe, right? But and then the other thing is, of course,
The thing would be if they allow for the gold to be, you could come up with a stable coin backed by gold. The question is, I guess nobody would trust the system if the gold was all held in Russia, right? But if there was this system that says, okay, certain countries that make up, I don't know, 3-4 billion people, of the global population, they all store gold in their own countries. And these countries are then able to settle trade with each other, then I think it'd be different, So it's not like everyone loves each other and super trusts each other, but the fact that some of them could have, say, skin in the game by holding on to that gold and settling it, right, would give it more trust, I would say, yeah.
So you would just use that token as a unit of account, really.
Yeah, exactly. And it'd be like, I don't know, say every country starts off with roughly 2,000 tons, right, that they stake into this new system. And you'd be thinking that on a whole, yearly, you'd have maybe 50 tons, back and forth that you use to settle. If any country goes like straight away in year one down by 1,500 tons, then I guess, the system would go and think, hey, is this person's economics even, I don't know if I want to keep selling him my cars, because come time to settle, he might not have enough unless he wants to stake more, yeah. Hey, can I just share my screen quickly? Just since we're talking about it.
I don't mind.
Thanks, man. Does this how do I share this? I don't know. I'll try. Tell me what you guys see.
Just push some buttons, you'll get there.
Doesn't let me share it. Maybe I'll send you guys a link. You can open it.
First time.
But it's pretty.
The Mac.
Yeah. It's pretty. I sent it on Signal.
Oh, God.
It's pretty timely because it's basically whatever we're talking about, right? So when we decided on the topic, that news article that we referenced came out in January before the invasion started. And this is just from, I think, 3 days ago.
Oh, so it reads, Russia and China are brewing up a challenge to dollar dominance by creating a new reserve currency.
Mm-hmm.
So did you read through it? How would it look like?
Yeah, so I guess because they they don't want to give out all the details now, right? But the funny thing is, they said that it'd be something that the whole world can use as an alternative, and really nearly instantly yesterday, right, the G7 are meeting, and the G7 says, yeah, we won't allow Russia to sell any gold. Like we want to cap Russia's ability to sell the gold that they produce, right? And I did the numbers on it, and the gold that Russia produces on a yearly basis, based on today's dollar value, is like $18 billion, right? Which is basically the amount of money that the Federal Reserve increases its balance sheet by on, like, not even on a weekly basis. Like, they do that by Wednesday. So I don't really understand why the G7 would be making such a big deal right now about telling the whole world that we're not going to let Russia sell their gold anymore if the amount of gold they're selling is so little, right? But if you listen to the speeches given by these guys, even people from China or Russia over the years, they have been saying that there should be a currency where it's a lot more neutral and settlements can be done in neutral assets such as gold, right? So it's just interesting that this chatter has been on the airwaves, right? Oh, gold-backed stablecoin, etc., etc. And now with all the sanctions happening, these BRICS countries start saying, hey, yeah, maybe we'll come up with an alternative reserve currency. Yeah, so in a way, it would be not truly decentralized, not by a long shot, but it would be more decentralized than what we have now. And even if you had two different systems, two different layers running in parallel, in a way, that's also a form of decentralization. Right?
Oh yeah.
I mean,
If there's a way to settle between those different
You need
layers, right?
to build a portal.
Integration of sorts.
Wormholes.
Yeah.
But so, I mean, it's so funny. I think that everybody's like, again, not everybody, but like world governments like dancing around this thing because they're like, maybe Jay, you know what the lessons are behind it better than I do, but I'm like, it appears to me that the input function of making a country prosperous is always related to energy, right?
Yeah.
And then what you do with the energy matters a lot, right? So if you're very productive, so Germany still produces a lot of stuff, China produces a lot of stuff. Like countries that produce a lot of stuff typically are prosperous, right? Because they convert energy into goods and then you can trade these goods and so forth. Russia is a massive commodity powerhouse, right? The United States is too on many levels, like lots of very rich in resources. But so I'm like, if we know that energy is life and prosperity, why don't we just have like, why isn't there a stronger link of our currency to energy? And so then when I think about that, and then when I look at what Bitcoin is, right? Bitcoin network literally is secured by putting in electricity, which then performs a function. So it's like the first thing that we've created, that humanity has created, first technology that converts power into something directly without having to go the route of, cutting down a tree, making it into a house, building a house from it or something like that. Like it's a direct link. It's not have to buy the goods, then take them to the factory and then sell the new, the value added goods. It's a much more direct
gold
route.
would be similar, right? I mean, gold also requires a ton of energy to extract it and then do anything with it other than
so like,
bragging.
Mining metals, I guess, is the closest thing to it, right?
Well, gold specifically. I mean, iron ore, you can do a lot of stuff with it, right? You can build stuff because it's really hard. But gold is kind of this soft metal that you can't use for a lot of things, right?
In a way, what makes gold useful is that it's almost useless, right?
Yes,
and therefore that's why it's neutral, even from the physical perspective, right? It's but yeah, that's why I think Bitcoin and gold both really are very suitable for fulfilling this function. You could, the good one thing about gold that is an advantage, it's got a ton of disadvantages compared to Bitcoin, right? It's not as easily transferable. When you want to bring it across borders, it's not, you can't do it the same way. It's not so instantaneous, the transactions. You don't, you need to assay the gold to make sure that it's legit. But one thing that gold has over Bitcoin is that it's money now. Like you don't need a mining network going into the future. You don't need energy tomorrow to have your gold be valuable today, right? And that's the only thing I think that gold has over Bitcoin. But again, I don't really and the history, global acceptance, right? And I don't subscribe to this thing where people go, it has to be gold or it has to be Bitcoin. Like I like both, and I don't see why. Why it basically it's to me the framing of the question should be, why not fiat, right? Like what else is better than fiat? It shouldn't be what's the best, and then it becomes this big mudslinging contest about gold's this, Bitcoin's that. I'm not sure if it's true, but I read that fighter jet pilots, right, when they're on their missions, they usually have a stash of gold coins and dollar bills in case they need to eject and they're on enemy territory. They can use that to try and find a way to get get out of the danger zone. See, like in that case, I don't know if Bitcoin would be as good, right? Or maybe it would be. I don't know.
I don't know, yeah. You
but
first
the
have to
point
buy a
is-
SIM card to transfer
yeah,
some of your Bitcoins, yeah.
yeah. So, but I just find it very, very interesting that for so long, these countries, right, the BRICS countries, they've all been buying gold like crazy. So if you looked at their central banks, balance sheets and the reserves that they hold, gold has always been something that they've been accumulating since the 2008 crash. And many people say that, hey, 2008 was when they realized that this banking system is not really neutral, because whenever every other developing country, even Britain, right, even countries like Britain that went through recessions, they had to swallow the bitter pill, reform their countries, go through like severe recessions, austerity, whatever, so that they could continue to take part in this global financial network, right? But then when the US faced the same thing in 2008, suddenly the rules changed, right? Suddenly it was like, oh, it's all right, we'll just increase our reserves and just bail everyone out. And they didn't have to follow the same tough austerity measures that nearly every other country had to go through, right? So I think that was an eye-opening moment for a lot of these other big nations, and they went like, hey, we trusted the US to be this arbiter, right, of fairness, and maybe we can't trust them as much as we would like to. And since then, a lot of countries have been increasing their gold reserves in terms of tons or ounces. So I find that quite interesting now, because if these countries, I don't think Russia, India, China, I don't think they really, really trust each other, but they're just united by the fact that they're under threat. I mean, China and India, just last year, they were in the news, right, about having border skirmishes and
Fighting each other, yeah.
Yeah. So why are they coming together now to create this alternative reserve asset, right?
Yeah, but it's, I mean, on some level, it's maybe like parents that are getting a divorce, they still want what's best for their children, kind of thing, you know. Like, yeah, we might be fighting, but we can agree on this, right? It's like a fundamental thing. Maybe,
Well, they
Yeah,
also need
exactly.
each other still for trade, right? And they know that.
Yeah.
Like, I mean, where's China going to sell their stuff to? Their economy is not going to work if they're just going to sell it to themselves.
Yeah.
And I'm sure there's the opposite equal effect as well, right? The super interesting.
And the problem with the West right now is that if you take them as a whole, as a block, that's like 750 to 800 million people that don't have enough energy. So I feel like it's like what you said just now, that energy was life, right? What happens, man, with this 750 million people when they decide to just cut all their energy inputs off?
Yeah, I mean, that's a whole other podcast, but you know, there's a centralization, decentralization move needing to happen there too. But it's I think in a big reason why we're not a lot further with renewable energy, which fundamentally is more decentralized, is because I think we've been trying to maintain centralization of power, like energy, not power, but energy supply, while at the same time trying to go more renewable. And that's not how it works, right? Like, that's like saying like, yeah, we're going to be decentralized, we're going to use Bitcoin, but we're just going to hoard them all in one place now, all in one wallet. And it's like, yeah, but you know, like you're trying to use a technology for something that's not meant to be, and that's why I think it's so hard to get it done.
Yeah, and if everyone becomes self-sufficient in energy through renewable energy, nuclear, whatever, right, then you have less need to trade. Yes. And if you have less need to trade, inflows and outflows, then the person controlling those channels loses influence, right? That party that controls the flow of money loses influence. So whoever is having that influence right now probably isn't very happy if everyone suddenly goes and puts solar panels on their roof, buys a small modular nuclear reactor, whatever, right? And says, yeah, I don't ever need to import oil again.
Yeah.
Um,
Yeah, exactly.
Yeah.
So
You-
it's fascinating. I think. I mean, I think it's a fundamental struggle almost, right? This at the root.
yeah. And it's interesting that you have countries like Saudi Arabia saying that they want to join the BRICS. Why would they be doing that? You know, or Argentina saying that. Argentina is like a massive, massive food exporter. Why would they suddenly want to join the BRICS? And it's weird that usually it's countries that have surpluses that want to store that surplus in something durable that they're going, hey, I wouldn't mind another option
Yeah.
here, right?
Yeah, and then they probably, yeah, exactly, have an alternative system, right? Like, what's the big deal? There should be choice, right?
To store that.
But
yeah.
it is a big deal to the person that runs that current monopoly, because it's an existential threat to them, right?
Yes, of course, because all the incentives have been aligned in their favor for so long.
Yeah.
But that also is, I mean, I'm willing to say that that's also why there's decline, right, in the West, or in the US specifically, because as much as they're, I don't know how to say it, but it's like, yeah, they have created the leash that's holding the tiger in a way, you know, but like, and it's been benefiting them, right, because everybody's like buying tickets to come see them holding this tiger, but then at the end of the day, that is still a effing tiger and it can just eat you, right? So like it's maybe more power than any one nation is supposed to have, you know. So it might be the so-called source of their rise, but then also their fall. Like, it makes poetically, it makes perfect sense to me.
Yeah, there's this thing called Dutch disease where they talked about the economy of Holland, right? Like the economy of Holland was very diversified. And going into, I don't know, the 60s, 70s, and then they discovered like huge reserves of natural gas just off the coast, right? And so Holland became this massive gas exporter. And so then the country became very reliant on just this one export. So the rest of the economy just basically had to give way to anything that was gas related, you know? And so the problem was that once that thing becomes your main export and you're not properly diversified, what happens when then that export starts to dwindle, right? And the rest of your economy is now no longer as vibrant and as diversified anymore. Like roads, you know, just simple things, roads, trains, whatever. These networks, they get thought about more in terms of, okay, how do we get big trucks, or how do we get whatever heavy machinery we need to get from this point to that point, because we need to support the gas industry. And it's a bit of a tangent, but you're talking about that tiger, right? For a lot of the West, I think that tiger's been the export of bonds, like US treasuries, right? Like just flooding the world with US treasuries, and whatever the country does, it's kind of directly or indirectly in support of that process, to make sure the whole world keeps using this system so that we can keep, you know, the incentives are all aligned to this one thing. How do we export more and more of these treasuries? And the issue right now is that the rest of the world's surpluses are not, it's not enough to pay for the deficit of these few countries. So it's not even a matter of choice anymore. Like in the past, it would be like somebody getting on a phone, having a tough conversation and saying, hey man, instead of buying this, can you buy our bonds? Because we really need you to support the system right now. And somebody could make that decision theoretically, right? Could say, all right, instead of, I don't know, building up my own military or reducing taxes or whatever, okay, I'll keep that surplus really high and buy your bonds because we want to support the system. But right now, there's not even that conversation, because the combined surplus of all the surplus nations are not enough to meet the deficit. So even if they wanted to, they couldn't.
Insane, right? I mean, that's like kind of, so thank you for putting into words and backing exactly this picture that I had in my head, right? Like
The tiger
the
on a
same
leash.
thing that like led them to the top is now eating them, right? Like that's exactly kind of the
Yeah, and I think right now they're really kind of scrambling, right? Because to me, in my experience, you can have laws in place, but the market always fulfills a need, right?
Mhm.
And when there's a need, you can make laws to make something illegal, but when there's a need, that need gets met. It's just called the black market, right? And right now, the powers that be are trying their best to keep a lid on things by making many different laws, right? Like you can't trade with this guy, you can't buy that thing, you have to save money here, you have, you know, you need to join our military alliance, you need to do this, do that, do this, do that. But at the end of the day, the market will fulfill its need whatever way. If it means it comes forth with something more decentralized, so be it. So I think we're actually viewing the whole system sliding down that scale, becoming more decentralized as we speak, right? It's like it's happening in real time.
Yeah.
Well,
Whether
I mean,
it gets all the way,
two Swift
I don't-
systems is more than one, right?
Yeah, two Swift systems. And the second Swift system, not one party has the key, right? Everybody else has the key. Everybody else can say, yeah, I'm not exporting my gold to you this year. I'm not trading my cars with you this year. You know, everyone can say, hey, you don't attack China, because if you attack China, all of our very elaborate gold trading mechanisms will go down. So in a way, everybody has an incentive to keep everyone alive, right? Because then trading keeps flowing, because it's decentralized. You don't want different nodes to drop, right? Like if you're a stool with 4 chairs, you really don't want one leg to break, and you actually want to keep building more and more legs, right? But the old system, it wasn't like that. The old system was a tower where everyone was just saying, hey, keep this tower strong, you know, build it up taller and taller and taller. Yeah.
Got a lot of great analogies this podcast, I must say.
Yeah, tigers and towers. You can call it tigers and towers.
Tigers and towers, man. Decentralization versus centralization. If you enjoyed this discussion,
keep going on this
today, please reach out to us. You do that the best, easiest way by joining our Discord, subscribing to Substack, following us on YouTube, subscribing to the podcast, whatever, all the things. But if you want to talk to us directly, best thing is join Discord and just find us. We're on there all the time. Some community member reached out to us last week with some really deep thoughts on some of the stuff that we had talked about, which was an incredible experience for all of us, because we have these discussions with each other. They are relevant to us and the stuff that we're thinking about and that we're doing, but it is so incredibly cool to hear from people who have listened and who then actually have additional thoughts that are like, I want to say like even greater than ours, and then share them with us.
That would be good. That would be
We
good.
should definitely get that guy on.
Yeah. That's like, that is super cool. And that's why we're doing this, right? Like, we're not doing this just to talk. I mean, we enjoyed this conversation with each other, but we're doing it for the greater benefit of building our community. So if this was maybe an indirect link to tokenomics, but I think super relevant discussion to everything that we're doing in Tokenomics DAO. So reach out, connect, subscribe, and thanks for listening.
Let's never decentralize Lois is plugging, okay? Before we go, let's just make sure we never ever do that, because I don't think we could
be centralized.
Yeah. All right, see you guys.
This podcast was not financial or tax advice. This channel is strictly educational and is not investment advice or a solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice. Talk to your accountant, do your own research. None of this is legal advice. This podcast is strictly educational. Talk to your lawyer.